Hi and welcome to our June 21 update. Here's a few things that we've noticed over the last couple of weeks which I hope will be interesting and keep you updated on the world of finance and also property as well. So the first thing is house prices. There's a lot of this in the media already. There's recently some data's come out that there's been basically a 12% increase, 11.9 I think they said, over the last 12 months in Brisbane and the Gold Coast. And so this is basically, averages out at 1% a month. There's a lot more buyers than there are homes for sale. And so you're still seeing those really big queues at open for inspections on the weekends. I spoke on our video from March, like a couple of months ago, I spoke in a lot more depth on the factors of why that was happening at the time. And those factors are still relevant today. And from what I can sort of tell and what sort of people are saying, it seems likely that that's going to continue for the rest of this year. So over the next few months to later in the year as we get towards Christmas, it may well continue. So if you're looking to buy a home, we're finding that for our clients, it's a very, very tricky time, and it can be for some time to come. Recently, Amanda and I and the kids, we bought a home, which was really exciting, and we found that it was very, very different to what it was previously. So previously when I buy a house, I would make a sort of like a low offer or a sort of reasonable to low side offer through the agent, and then it would be a matter of negotiating back with the seller and coming to sort of a middle ground. So they're here and we're here, and we sort of average out in the time. Now, at the moment, my experience is that this doesn't work at all in today's market. And so we had missed out on one property that we wanted to buy. But the property that we ended up buying, what we found is when we went for the open for inspections, there were heaps of people using a little bit of sort of, I guess, my experience in what we do. A couple of things we did was we took along the kids to the open for inspections, and I said hello to the agent, every time, and made sure that we, sort of spoke to her and had a little bit of a conversation with her so that she knew who we were. I felt that the property that we bought, that there was going to be, quite a few offers on it. And so what I wanted to do is when you get to a situation where there's going to be a multiple offer situation, I wanted to know or be in the game so that I knew that there was a chance that we would have to make a second offer. So the first offer that you make in a multiple offer situation doesn't really matter. It's really the second offer, which is the one that counts, okay? So what we did was the first offer was considerably on the low side. And so then what I did was I talked to had a bit of a chat to the agent about the offer and the terms of the offer. And the terms, which is like, when the property's going to settle and giving the seller enough time to pack and move and all that kind of sort of stuff was important, I felt, in our situation. And also everyone likes a quick settlement as well. And so because I work in, doing what we do, I made sure that we could get it as soon as possible, but we also had to get our finance approved. So they wanted us to go unconditional without getting my finance approved, and that wasn't something that we wanted to do. So I had to negotiate that in as well. So it's just what we do for our clients. But in the situation, what we did was I had an idea of what we felt the property was worth because we knew the market fairly well. We'd been watching it probably for 18 months. And so although we came in with a low offer for a start, when we made the second and final offer, we increased it, and I was just over the other competing offers, all right? And so that was really what we were thinking, and if it had been in a situation where we'd been buying the property, that's what we felt we would have paid for it up front. But we were aware that there was a lot of other people, like I said, there were 8 other people who were buying, and so we needed to be conscious of what they could offer as well. Now, the things that I found that really worked is it definitely helped, I think, with the agent that she knew that we were buying it for our family. So every time we went there, we had the kids running around trying to pull the place apart and, all that kind of stuff, and we had to manage them. But I spoke to her about that from the thing that we're trying to buy this for as a family house, because I think that, that emotional side of things when it comes to people choosing between who they're going to sell something to, I think it helps. And anecdotally, I've seen it help work in the past. So something that we use for ourselves. I also made the finance period as short as I could. and I kept in really good communication with the agent. All right, so I told them what was happening. I told them when we'd ordered the valuation. I told her when it had been returned to the bank, and I communicated all the way along the process and let her know. And also when she said to me, "Oh, look, can you offer more?" Because the seller wanted a higher price than what we were prepared to pay. And I said, "Look, no, that's our maximum. You know, we came with our best offer at the start. And you know, that's what you asked us to do." And so I, you know, have to stay calm through the whole process and just communicate and let them know what's going on and all that sort of stuff. So it was really good in the end, but it was incredibly stressful. And like I said, it was very, very different to what it was when I bought houses previously. So you've got to adapt and learn. So let's finish with that now in terms of like my experience, but let's talk about now with fixed rates. So one interesting thing that's sort of started to change over the last couple of weeks is that I've noticed that some of the banks with their 3, 4 and 5 year fixed rates, you're now seeing them move up a little bit. And this is based upon the fact that the expectation is that rates may rise in 3 to 4 years' time. Now 3 to 4 years from now is obviously 2025, 2026. It's a long time away and a lot can happen in that time. But it's still interesting to see that this is an indicator and it's starting to happen, and it's starting to happen now. So the change has been is that where you've seen some rates that were below 2s, so maybe in the high 1.8, 1.9s, now you're seeing them nudge, you know, in the early 2s, so 2.1, 2.2, 2.3. So predicting a few years out is very difficult. It's conjecture, but it's interesting to see. Now, why is this good to know? Well, it's based upon, these rates are based upon banks' predictions, all right? They know much more than what we ever do. It's impossible, in my opinion, or it's very, very difficult to beat them at their own game. But fixed rates, when we talk to clients about it, is you want to see what works for you, all right? So if you're very comfortable with where you're living and the loan repayments that you're doing, you might fix because you go, I like the fact that this gives me certainty for the next 2, 3, 4 years about my repayments. And so you might lock that in because then it gives you a set, you know, obligation each month or a set payment. Now, if you're going to do that though, it's important to remember never, in my opinion, to fix 100%. And the reason why that is because, in my opinion, you always want the flexibility of having some variable, because you can pay that extra and pay extra payments off that and pay it down sooner. So you will notice that with fixed loans, if you pay extra into the loans, usually above a certain amount, you can be charged penalties. Whereas if you keep a portion of it variable, you can put as much into that as you want, pay that down sooner, pay it off, and you can still have access to it if you need it in an emergency, but you can reduce the interest that you're being charged. So if you think this might be something that you'd like to talk to us about, don't hesitate to get in touch. My situation financially is we're staying variable. At the moment, the property that we bought needs a lot of renovation. And I've also got a goal, like we ended up borrowing more than what I had wanted to initially. And so what I've got is a goal over the next couple of years to really increase the payments into that loan and to pay it down sooner. And so because of those situations, our personal situations, we've decided to stay variable. But I also recognize that, you know, for some people in their own personal situations, fixing can give them good peace of mind and it can be a good outcome for them. So the process to expect if you fix is it's not as complicated as applying for finance. Some people are a bit scared away of the whole process. Some banks have a very quick fixing process, so you can literally do it within a few minutes online. You can fix your loan online. And then other banks, it can take a few weeks or more depending upon their process. So you'll often have to sign a form, you send it into them, they will prepare some loan paperwork, they'll send it out in the mail, and then you get it, and then you have to sign it and then return it back to them, and then they process it. So if we can help with any of that at all, let us know, and thank you very much for watching.